Moving averages are not just lines on a chart. They are battlefields where capital fights for control. When moving averages squeeze together tightly, bulls and bears are locked in fierce combat. When the squeeze suddenly ends with massive volume, the winner emerges and a trend is about to explode. Today's strategy is designed to capture these crucial moments in capital warfare. Welcome to our Strategy Spotlight channel, where we focus on screening the most practical and proven strategies in the cryptocurrency space. Sideways consolidation is the market's main theme, and everyone agrees that prolonged sideways action eventually leads to significant trends. However, the core pain point lies in the heated debate between sideways leads to drops, and the longer the sideways, the higher the breakout. Traditional subjective judgment faces the biggest risk of directional errors. Once you guess wrong, you not only miss opportunities, you could face serious financial losses. Today's moving average squeeze and divergence strategy completely eliminates subjective guesswork. It uses strict quantitative methods, verifying signals through multiple technical indicators. This transforms the ancient wisdom of consolidation leads to change into an executable digital trading system. The strategy does not predict direction. Instead, it waits patiently for the market to provide the answer, then quickly follows the winner. It specializes in capturing the decisive moments when bulls and bears reach their final verdict. This strategy is built on deep understanding of market dynamics. It systematizes the process of turning consolidation into trends through 3 progressive stages. Stage 1 is squeeze identification, where we monitor the price gaps between 4 different period moving averages. When gaps shrink within set thresholds and persist for a certain period, we confirm that bulls and bears have entered balanced combat. Stage 2 is the observation phase. After the squeeze ends, the strategy enters observation mode, monitoring 3 key elements: divergence amplitude, alignment direction, and volume changes. This phase is actually when capital quietly positions itself. Stage 3 is signal confirmation. Only when moving averages form clear bullish or bearish alignment, divergence exceeds confirmation thresholds, and volume surges significantly. Only when all 4 conditions are met simultaneously does the strategy trigger trading signals, confirming trend initiation. The strategy integrates comprehensive risk management through fixed risk-reward ratios and optional trailing stop features to ensure capital safety. The strategy's main goal is to achieve positive expected returns through high standard entry conditions and strict risk control systems. The parameter design reflects deep understanding of market dynamics. The 4 moving average periods cover different capital cost distributions. Short-term averages reflect quick money movements, while long-term averages represent institutional capital costs. The squeeze threshold is the strategy's core parameter, determining sensitivity to bull-bear balance identification. Smaller values require stricter conditions. Minimum squeeze bars ensure combat state persistence, avoiding brief price overlaps being misread. Divergence confirmation thresholds and observation periods together form the trend confirmation mechanism, providing adequate space for capital positioning and signal confirmation. Volume multiple parameters are key to distinguishing real from fake breakouts. Massive volume often accompanies major institutional moves. Risk management parameters reflect professional capital's risk-reward expectations. Trailing stop options provide flexible capital management. These parameters can be adjusted based on different asset characteristics and personal risk preferences, but core logic remains unchanged. Indicator calculations show quantitative analysis of capital cost distribution. 4 moving averages represent average costs of capital across different timeframes. When these cost lines converge, it shows various capital sources have reached consensus around current price levels. The moving average band calculation method demonstrates the strategy's scientific approach. By using relative percentages rather than absolute differences to judge squeeze levels, the strategy adapts to assets across different price ranges. State variable design reflects deep understanding of market rhythm. Squeeze count records the duration of bull-bear deadlock. The longer the time, the greater the accumulated energy. Squeeze phase marks which combat stage the market is in. Observation count manages the observation window for capital positioning. Divergence detected records the decisive moment. This state machine design simulates the complete process of real market capital warfare, from balance to imbalance, from positioning to explosion. Each stage has corresponding quantitative standards. Signal generation logic perfectly explains the market wisdom of consolidation leads to change. Squeeze state identification equals capturing periods of fierce bull-bear combat, where price repeatedly battles at key levels, with all capital testing each other's cards. When squeeze ends and enters observation period, this is actually when capital begins quietly positioning, as smart money builds positions while waiting for the final trend explosion. Moving average alignment pattern detection reflects intuitive judgment of capital flow direction. Bullish alignment means short-term capital cost exceeds long-term capital, showing continuous inflow of incremental funds. Bearish alignment suggests the opposite, hinting at gradual capital withdrawal. Volume confirmation mechanism is the strategy's finishing touch. Massive volume often accompanies major institutional moves, serving as the key criterion for distinguishing real from fake breakouts. The volume-confirmed variable's continuous monitoring during observation periods ensures we will not miss any large-scale repositioning signals during the observation window. The final trading signal's four-layer confirmation mechanism reflects comprehensive verification of market combat results. Only when squeeze, alignment, divergence, and volume all confirm simultaneously can we determine the bull-bear battle outcome is decided. Strategy execution reflects professional capital's risk management mindset. Entry timing selection strictly follows the principle that bull-bear battle outcome is decided. Only when four-layer confirmation signals trigger simultaneously does execution occur. This cautious attitude stems from deep understanding of frequent false breakouts in markets. Risk management mechanism design further demonstrates institutional-level professionalism. Fixed risk-reward ratios reflect institutional-grade risk control standards. Trailing stop functionality further optimizes capital utilization efficiency. When markets show reversal signals, it can protect profits timely. Symmetrical treatment of longs and shorts ensures consistent strategy performance across different market environments. This execution mechanism not only ensures controllable strategy risk, but more importantly establishes trading discipline that matches market combat rhythm. Visualization design cleverly presents the complete process of capital warfare. Yellow background identifies squeeze periods. Blue background represents observation phases. Orange background indicates divergence confirmation periods. Shape marker design is simple and intuitive. Green upward arrows represent bullish force victory. Red downward arrows mark bearish camp dominance. Alert system design reflects practical orientation. Trading signal alerts are for actual execution. Squeeze confirmation alerts provide positioning warnings. Divergence detection alerts mark the arrival of action timing. From a capital warfare perspective, this strategy excels at capturing classic patterns where prolonged consolidation explodes into trends. Breakouts from long-term consolidation at key support and resistance levels are the strategy's core advantage scenarios. When four moving averages squeeze together near important price levels for extended periods, it shows bulls and bears are engaged in thorough combat at this position. Once the squeeze ends with mad divergence and volume expansion, it often signals strong trending moves are about to unfold. Mainstream cryptocurrency directional confirmations during phase transitions also apply well, especially at turning points when market sentiment returns from extremes to rationality. The strategy effectively identifies key moments when capital repositions. Important precautions include avoiding squeeze signals during strong one-sided trends, because strong trends have continuous momentum characteristics rather than repeated battles. Mass struggle to form effective squeeze states during such periods. Additionally, strategy signals can be flexibly adjusted based on asset characteristics. High volatility cryptocurrencies can use relaxed thresholds, while low liquidity assets need tighter thresholds to match their irregular volume patterns. Advanced application techniques include combining capital flow indicators to verify signal strength, which significantly improves strategy success rates. When MA Squeeze-Divergence signals align with large capital inflow and outflow directions, signal reliability increases substantially. Using multiple timeframe resonance to improve success rates is another important technique. When daily level mass show squeeze-divergence signals while hourly levels also display similar directional technical patterns, this resonance effect often brings stronger trend continuation. From a professional quantitative trading perspective, this strategy successfully achieves digital transformation of traditional trading concepts. Strategy completeness performs excellently, forming a complete trading loop from squeeze identification to divergence confirmation to risk management. Each stage has clear quantitative standards and market logic support. Risk management design is professional, with comprehensive stop-loss and take-profit settings enhancing capital safety. Strict four-layer confirmation mechanisms effectively reduce false signal probability. Adaptability has certain limitations. The strategy depends on market environments, with limited effectiveness in extreme trending or high-frequency noise environments. Traders need basic market cycle judgment ability to select appropriate application timing. Understandability is the strategy's outstanding advantage. MAME squeeze concepts are intuitive and easy to grasp, with clear state divisions. Traders can easily understand each stage's market implications. Innovation is reflected in the clever combination of traditional trading wisdom with modern quantitative techniques. By using multi-dimensional indicator verification, it eliminates subjective judgment flaws, representing beneficial exploration from technical analysis toward behavioral finance. Practicality excels in specific market environments, but requires appropriate market selection and parameter optimization. For experienced traders, it is an excellent supplementary tool for strategy combinations. Today's strategy successfully achieves digital application of the traditional trading concept. Consolidation leads to change from a quantitative perspective. Through objective technical indicators, it eliminates the randomness of subjective judgment, injecting modern technology's precision into ancient trading wisdom. If you have any good trading ideas or traditional concepts, you can verify and experiment with them on our quantitative platform. Let data speak and logic be clear. This is exactly the charm of quantitative trading.